We got Chris Pulver on the way right after this. Stay tuned.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Monday. Welcome back. I just had a couple trades close out for some profit. And let's take a look at everything today. So trades this morning, a little bit of SPX action, and also a trade that I posted last night in the Discord channel. I did a trade on ES, the old E-mini futures. Here's what the trade looks like. Let me go into ES 1, 2, 3 analysis. You can see, let me go this way here. Should be a little bit larger. There we go. So right now, if price stays where it is, then we have full profit. This would have been a fill for about 50 cents. And I wanted more than that, but it's 50 cents, which means, per contract, I'm getting about $25 per contract for profit. If price stays where it is, easy win. If price works its way back down, I do have a profit trap towards the low end of the expected move today. So if we get down towards like 57.50, which right now would be about a 25 to 30 point move, there's a chance that we may end up hitting a profit trap, which gives us about $250 instead of just the 25 on the tail credit. But it was a pretty good trade overall, looking pretty good. We'll keep an eye on this one for the morning, and this is going to expire later in the day. So I got filled for 50 cents. I'm looking to see if I can keep that 50 cents. But I also have the profit trap, so I want to keep an eye on this one. Right now, this actually might close out for profit early. Let me see. You're trading for like a 25, 30 cent debit right now. I suppose what I'll do, I'm going to go ahead and cancel my take profit order and just keep an eye on this for the morning. Because if by, let's say, 2, 3, 4 o'clock today, if this thing actually drops down by maybe 25 or 30 points, then I've got a profit trap right there that I'd like to see hit. So that's one trade for the day. The other two, SPX. They were nice little closeouts for the morning. Just grabbed a couple of bucks right out of the open. And price is drifting a smidge higher today. Here's SPX. I see virtually nothing to the downside. You see SPY. This market is loving this melt up environment where we just keep going up. We did come back and try to fill the gap with a little bit of a wick right there on the SPY. Looks like we're just in a bit of a melt up. Highs from Thursday last week around 571.13. We could probably revisit 570 to 571. We'll see if that's the case. So watching that for today. News came out this morning. We had PMI manufacturing, PMI services number. Services came in as expected. PMI, I think, was a slight disappointment. Market still hasn't shown any sign of like, oh no, the PMI numbers are down for manufacturing. Well, last time I checked, the U.S. is hardly a dominant, manufacturing country compared to our services. So anyway, that's what price action is doing thus far today. Previous all-time highs. This is SPX around 57.33. So I'm just kind of enjoying the little melt-up scenario. If it goes higher, it goes higher. I do have some hedges to the downside just in case if we come back and do a gap fill from the FOMC last week on Wednesday's close. I will be watching for that in the near term. Otherwise, I'm looking to see if this market just wants to keep going higher. So let's go to the daily chart here, take some requests. And let me go ahead and take a look at a bit of everything today. So my, top down, the S&P, here's what I'm looking at for analysis. What happened to what the heck? There we go. I was like, where's my analysis? Anyway, so last week I was looking at, Wednesday's close to Thursday's open and close, kind of marking this as a potential indecision zone if the market's unable to, continue to go higher. And maybe it is, maybe it isn't. I just thought there'd be a lack of catalyst if we're missing a wave of employment news. We're missing inflation news. We still have the Fed coming out in November, but also the market can front run that entire situation where it's like, you know what, we'll wait. Or rather than wait for employment news to actually hit the headlines, let's just make a run and try to push up higher. And if the market disappoints, then we'll reprice. But if it doesn't, we keep going higher. Or the market just is caught up between a lot of volatility from Wednesday, Thursday last week, and we see some indecision. So for my SPY, I'm watching these two levels. This high is around. Where's the value at? It's sitting right around the Thursday high, which is around 572.88. And then the Wednesday low for the close of FOMC, that's around 561. So I think we could see price somewhat contained this week. If you go to the Nasdaq, same thing. Wednesday close to Thursday's high, looking to see if price stays indecisive. I do have some volatility plays out to October 4th. You go to the Dow, Wednesday's close to Thursday's high, somewhat indecisive. The one thing the Dow's also running into, just based on these recent connections, would be resistance, and if we have this area acting as resistance. Now, I don't want to call the high on the Dow. I'm not going to. I think this market could still, break and go higher, but it would also make some sense that we do have some volatility right in here. That's around the halfway point of this range. If we have any dips or pullbacks on the Dow, and that's big. I mean, that's a monster correction on the Dow. That's essentially saying, like, we're going to do the same thing we did back in July. I don't know if that's going to happen. But if we do have a pullback here, I might be looking to establish some new positions on DIA. If we come back into the midpoint of this area, probably the same type of thing. So either getting long, looking to see if I can get filled on some type of support level on the DIA. And then the Russell, same type of thing, some indecision here. There's still almost 10% to get to the all-time highs on the Russell. To me, that's a fairly attractive index play for the rest of this year into Q1 of next year to see if it does play catch up and gets up towards that. I think the price is like 240 to 245 here. So price is around 244 and change. I'd love to see if the Russell can catch up. The issue is it's Russell 2000. Your top performers are carrying most of the performance. It's similar to the S&P where you have, it's the market breadth has been improving. Last week we saw the advanced decline line get up to 68% of stocks advancing, 76% of stocks advancing. So the market breadth has widened out, which is a good thing. It's not all Mag 7. It's not all semiconductors. It's not all NVIDIA. It's certainly broader. We've seen utilities perform. Let's actually go year to date for sectors and see what last week looked like as well. So last week, let's go 5-day performance. We saw energy actually lead all sectors last week, outperforming the S&P as well. Financials were in second place, 2.58. Communication services, consumer discretion. You see utilities continuing to do pretty well. We go year to date. Impressive run, man. Utilities leading still at 26.45. What you're noticing in the utility space is you have some energy companies, energy utilities, you're starting to see more and more alignments with, well, because of AI, and this is, it could be a story right now that the market's just getting behind and pushing these things higher. But if the infrastructure demand for AI is such that huge utility companies are saying, okay, we need to expand the grid, we need to expand our services, we need to be more efficient, blah blah blah. And then you also see that with huge pockets. Utilities is up for a reason, and for everyone to look at. I was skeptical, thinking like, okay, gold is leading and outperforming the S&P this year. Utilities is one of the best performing sectors, if it's now the best performing sector. When you have utilities and financials leading the S&P 500 in all sectors, I get a little bit skeptical. But what this also is illustrating is a bit more of a rotation outside of just the Mag 7, outside of just AI, outside of just semiconductors, and actually broadening out into other spaces. Now, utilities is typically a high debt structure, but it's in high demand. But also with rates coming down, that's certainly helping their, I'm sure it's helping their balance sheet. Speaking of rates coming down, November is looking for another potentially 25 to 50 basis points. That's 2 days after the election. December, another 25 to 50 basis points. These numbers are going to change like they did in September, but the Fed is likely still going to be cutting, and possibly up to another, let's say 75 basis points to maybe even 1% by the time we wrap up the year in December. So Fed rates are coming down. if I go to my watch list here, mortgage rates, went from 7.8 all the way down now to 6.09. And this, before we printed the 50 basis points cut last week, we were sitting around 6.2 on the 30-year mortgage rate. Now we're at 6.09. Obviously, I'd like to see this drop a little bit lower. The best thing to track is, where is the 2-year yield? The 2-year yield is sitting right around 3.6%. Historically, that's always been kind of the neutral expected area for the Fed funds rate to be at. And so if the Fed actually shoots past that and maybe cuts into like 3.5%, 3.25%, that's fine. But we'll be watching between the 2 and the 10. Right now, that 2 and the 10 is around 17 points inverted. I think I have that right here. Where the heck is it? Fed funds rate, 3-month, 2-year, 10-year. There it is. So the 10 and the 2. This is the what was the inverted yield curve. Okay, inverted yield curve, and now disinverted. Now, historically, this isn't a good thing. When we come out of this inversion, there is a tie and a correlation with labor. If we're come out of this inversion into disinversion, labor numbers will continue to be important. The Fed is hopefully staying ahead of that with the 50 basis points cut and more to come. And I do wonder if this actually does turn down a little bit. I'm not saying it has to go reinvert, but I thought that probably wouldn't be a bad thing either, because this was the strongest, tightest labor market that we had, with also the highest interest rates we had. So now we've been loosening in labor, but we're now loosening in monetary policy a little bit. And I think the word easing, I mean, obviously cutting potentially 2% in the next 12 to 16 months would be considered pretty dovish and loosening, but it's because we stayed restricted for so long. There's a bit of that extra cushion that the Fed can cut rates. Okay, so anyway, there's your tracker right there for the 10 to the 2-year. Watching the mortgage rates as well. Futures market, I'm also tracking a couple things. This is your Bloomberg high yield bonds. This is AAA versus triple B, AAA versus triple B and C. If this starts to head lower, sharply, then we have potential recession concerns. Also, not just initial jobless claims, but continuing jobless claims. Everyone's all worried about this. Looking at the Edge Finder, we've had consistent jobless claims. Yes. We've obviously had, disappointments in non-farm numbers. We've had an uptick in our unemployment rate, right? So all these things are advancing. But from a historical standpoint, if we go to, let's go to this chart here. This is continuing jobless claims. Let's just go back to say, all right, when was our last real recession? We'll say, so COVID, obviously that's a bit of an outlier. The last time we had this was back in 07, 08. Now, this is the same thing that we talked about when it comes to the SAHM rule, SAHM, that the running 3-month trend in unemployment it's 0.5% higher than the 12-month low. That triggered this year in July. I think what the Fed is clearly trying to avoid. I mean, look at the last time we saw these big upticks. So when we see continuing jobless claims trending higher, it doesn't look good. Now, it's not so much the number, right? Continuous jobless claims, it's not so much the number as much as it is the rate of change. So, for example, if we're sitting here at 220K on continuous jobless claims and we jump up to 250, okay, it's not the 30K that we're really necessarily worried about. It's the rate of change if we go higher and higher month over month, and it's the percent of increase. That's what the market's going to be taking notice of. And so if we start to trend with a severe rate of change, that's likely going to have, consequences of, oh my gosh, the labor market is becoming a problem. So we need to keep an eye on that. Okay. All right. So top down indexes wise, I'm looking for some indecision based on some of the noise we saw last week with Wednesday's close into Thursday's high. We might just have a lot of indecision this week. I will probably end up looking at position in a similar way where I'm going to stay with a bit of this bullish bias. I do have some hedges down here out to the end of, I think I put one out to this week as well as the 30th, just in case. I mean, it's a very small risk trade. If we get down below 560, that pays pretty well. If it gets to 560, I need this to get back down to like 565. That's a little bit of a hedge. And then on the ES trade, I've got a hedge as well. So, I'm just watching price, but there's not really a ton of news this week. We're pretty light on earnings. The only earnings report that I think might matter would be Micron. Micron has earnings on Wednesday after market close. I wouldn't mind taking a look at that one this morning just to kind of price in something. I'm not necessarily that interested. Compare Micron to semiconductors, okay, or compare that to SMH, or compare that to NVIDIA. Okay, I mean Micron is sitting nearer the lows than everything else, so it's not the same correlation. Nvidia looks an awful lot like SOXX. It looks a lot like SMH, and I'm sure Nvidia will potentially continue to go sideways, which makes me not real happy about this trade when I actually need some volatility, which I'm hoping we can still get it. This is a trade out to October 4th, so I'm hopefully giving myself enough time to see some volatility, and perhaps Micron with earnings does impact semiconductors a little bit, but Nvidia is what it is, and it's right now $2.84 trillion. If it moves, it moves. Great. If it doesn't, I'm still watching the S&P and I'm watching the Qs. Okay. Yeah, everybody's lined up there. Yeah, Lee says JP speech on Thursday. Yeah, this is kind of a wild week. Like Thursday, this week we have a lot of speakers on Thursday from the Fed. So we get through the Swiss National Bank, which, by the way, is expecting to cut rates this week, which I hope they do. That'll help my overall kind of core positions on a weaker Swiss. If we have some risk appetite, especially all my positions, I'm long Aussie Swiss, long CAD Swiss, long Euro Swiss, long Pound Swiss, long New Zealand Swiss, long Dollar Swiss, and some better than others. But for the most part, I've had that position since early 2023. I've enjoyed a nice positive carry trade through that entire period, and I'll hopefully still enjoy a little bit more carry if they cut rates. And then we have final GDP numbers out of the U.S. on Thursday morning at 8:30, unemployment claims as well. And then, like Lisa, they're all of the Fed speakers. I mean, we have Fed member Collins, Kugler, Bowman, Bostic. I took a live squawk feed today from Bostic, and I thought this was interesting. So the recent dots show a fair amount of dispersion in the opinion of the Fed. Labor market has not been driving inflation. There's a lot of uncertainty about where the Fed will cut to. Fed is not in a mad dash to neutral. It's in favor of, I didn't read that one in full, does not expect to see unemployment increase much further. I mean, they're saying that the unemployment rate's going to be around 4.4. I mean, that's only 1/10 of 1% different than what we saw back in July. So that's a pretty bold claim to say that we are going to cut rates and then employment numbers are going to just get so much better. Maybe they do, maybe they don't, but either way. Optimistic about the future of the labor market, not flashing red. Labor market deteriorates. This is a reason for faster pace to neutral, but that's not the baseline. Long run inflation expectations relatively stable. Then we have the neutral rate is around 3 to 3.5, 3% to 3.25%. We saw the 2 years around 3.6. And then we have a pent-up demand, maybe substantially less. We've got the split economy with some having lots of money that are flush and then others living at their limits. Obviously, we've seen, savings going way, way, way down. But, that's the economy we're dealing with. So the cut was a big deal. It could be, I mean, we've seen history show that half the time, like over 20 instances, the market ends up higher. We've seen also the last time we cut 50 basis points, 50 basis points from 2001, 2007. Those 50 basis points cut obviously yielded some pretty nasty results a year after. So I just continue to trade price, be cautiously optimistic, take my potential protection to the downside. But if the market wants to melt up, so be it. That's the easiest thing in the world, is to be, slightly tilted bullish with the market that wants to melt up and go higher. Okay, let's talk some currencies. Let's talk oil, gold, silver. The dollar, you talk about some indecision. I mean, how many of you are aggressively positioned on the dollar? I'm just curious. I look at this level, and I still think that the dollar, if we're going to get weaker, the dollar is probably the best indicator for the overall markets to go higher. If the dollar goes down, everything else looks good. This includes gold and silver and oil, probably Bitcoin. You can throw that in there, Ethereum as well as a peripheral crypto. But if the dollar gets weaker, everything looks better to the upside. That's my opinion. Now, if we stay in this super choppy, noisy zone right here, I don't know what the dollar is going to give us. If the dollar is going to give us a bunch of indecision, then, look, the market can still melt up higher. But if the dollar catches a bid down here and squeezes and goes the opposite way and kind of plays a bit of a contrarian trade off this multi-year low, then we might see another pullback before we have the market actually go higher. I'm not sure. So I don't necessarily love the idea of selling the dollar immediately on a breakout. What I look for instead is if the dollar wants to break and take out these lows, then any type of pullback here with confirmation, I'm looking to then sell the dollar. So if we break, pause, go a little bit lower, you can sell that flag. If we break, pause, pull back, look to fade that move. But I'd like to see the dollar continue where it started. This high to low, I'm looking for symmetry to be down here, but we're right at those support levels where if we hang in support, I can see support holding, and it's just not quite ready to break. But it's not summer anymore. We're actually almost through September. And if we have Q4, October, November, December, is Q4 going to be everything to the upside, and the dollar's just going to get slapped in the face again? Maybe, possibly. But if the dollar catches bid, I think a pullback prior to the election would make some sense, right? Dollar pulls back here, gives us a bit of a risk-off tone. Then there's the aftermath of whatever happens around the election, good, bad, and different. But we'll see what the market gives us by, maybe get through the election. November, December could be an aggressive couple of months, which means October might not give us direction right away. We might see more of this kind of September chop, and maybe it carries on to October because all we have is a little bit of employment news, a little bit of inflation news, but the Fed's not saying a word until November, and that's 2 days after the U.S. election. So all sorts of interesting stuff. But dollar index is sitting right here at major support. I'm watching that level closely because if we break lower, I would like to participate. And even if I don't participate with dollar weakness, I don't express that in currency trading. Anything to the upside here is how I'll be making money on a weaker dollar. So that's one way to do it. Okay. All right. Dollar stuff. Let's go to U.S. oil. Oil has bounced off nicely off the 65 and change lows. I did take profit on that 65.5 level. Let me make sure. Let me see if I have any other CL positions running. So right now, CL 65 by 64 by 51. That's showing some profit. I think overall, let me check this overall position. So 65 by 64. That's basically my trap to the downside, and then my overall position that should have given me. I mean, I'm pretty much done with this trade in profit. Looks like I collected 24 cents credit, so about 240 bucks. Well, actually, no, it's about 480 bucks. Let me see if I put in a similar trade. So the credit on this, about $240. Yeah, so I think I'm going to go ahead and protect this trade and just take the profit, because right now the efficiency is if I were to sit here and wait with this bounce that we just saw, if I take this position, which I collected 24 cents credit on multiple contracts here, right now it's trading for about 5 cents. For me to sit here and wait for another several months to get an extra 4 cents of decay is not worth it when I can just take the profit right now. And so instead of making about $480, I will make probably 300 and what is it? I guess $380. So instead of making 480, I'll make 390 or 380. I'm okay with that, because for me to sit on this for the next 3 or 4 months is not worth that buying power reduction. It's not worth waiting for that potential outlier risk. So I'm going to go ahead and protect this right now. So I'll take 1, 2, 3, 4, and look if I can close this at a. It's showing 5 cent credit, which I think is interesting. If I can somehow close that for credit, that'd be even better. That'd be 29 cents. But the debit showing here at 4 cents ass. Let me see if I can get like a 0.01 cent credit and just make this break even. Let's see what this gives me. Okay, so I closed for a 24 cents credit, which also closed for an additional 3 cents. So I actually netted 27 cents on that trade, which at 2, it's 27 cents. 27 cents times 2 times 100. So, well, times 1,000. So 540 bucks on that trade. I'm gonna do the same thing here. 1, 2, 3, 4 for 24 cents credit. I'm gonna try to sneak out another. Can I sneak out like an extra 5 cents credit, 3 cents credit? Filled. So that's 27 cents credit. Good. All right, just give me about 60 seconds. Let me close up these positions here. Close. 0.03 credit. Filled. Okay, so that's 27 cents net. I'm liking that. And that's way better than hanging on to it for the remainder of the period here. That's an IRA account. Didn't have that trade. This one has it. Same thing here. Let's go 3 cents credit. Very nice. And
Hey,
I hear Frank. What's up, dude? How are you?
Pretty good. How was your weekend?
Weekend was good, man. Went by super fast, but it was good. So, all right, I'm done on that CL trade. We took some profit here on CL as well. I have a 65 by 55. I would like to check on those. I'm just doing some profit management here, Frank. Whatever you got, just kick it around. I'm just going to start looking at maybe protecting some. I had oil in at the lows with the futures market for CL. I did a 65 by 55 or 65 by 64. So I'm looking to take some profit. If it's mostly, if I'm like 80, 85, 90% of that profit is in my hands, I can take it now. I'm just going to go ahead and take it and protect it. So that's where I'm sitting here. So these are done. I'm looking for CLZ.
So you said you're trying to trail out of oil?
Not trail out. I'm just trying to close it. So I did a 65 by 55 for 50 cents. I collected 50 cents, and right now this is trading for 89 cents. So I'm not going to close out of that one yet. Okay, that one's fine. So I'll let that one marinate a little bit longer. But the other one I closed out for, it was like a combo, like credit spread, whatever. I'm closing out, end up grabbing about 27 net cents, which is good. And then this one, I'm trying to grab another net. This was November 15th. I have a 1x2. This should be a credit. Oh, there it is. 65 by 55, 61 cents. Okay, so I'm upside down about 20 cents in this one. But I'll let that one just hang out. I've got another couple of months. Hopefully oil demand is up and we'll continue to see oil rally, or at least stay off this support zone. So I still like oil to the upside, at least in the near term. Gold continues to do virtually everything right and nothing wrong. There's not even been a pullback recently other than this little pause we saw around early to mid-September. I'm just letting gold profits continue to rally. I'm not doing anything. I'm not adding anything. Not yet. I want to see a dip or pullback before I take another action on gold, but no complaints if it's going up. I'm just not buying highs. I'm waiting for some type of pullback. And then silver. Silver has paused, but I'm looking to see if silver will continue to play catch up. My first target on silver is 35.90 or 35.85. Bitcoin, I'm bullish. Last week they announced with IBIT that the BlackRock spot ETF is going to allow you to trade options around that, which I think is pretty good. I do have some exposure on BITO.
Oh, really?
Yeah. So this is a big deal, man. I like this a lot. Now, my plan is if and when I can trade IBIT with options. I'm not sure when they actually allow you to do it. But if I go into trading right now, let's go positions, table. So it says there's no options available. But whenever IBIT has options, what I'm probably going to be doing is working for some active cost basis lowering. So I just want to, I know my break even on IBIT is, let me check this here. So my tracker, so my ownership positions, IBIT. So right now, let me see if I've got a break even here. So I've got a buy at 31.50 and a buy at 28.50. So those should be equal weighted. So if I go 28.50, 31.50 and 28.50. So my break, 897.75. What did I do? 31.50 plus 28.50. There we go, divided by 2. Okay, so my break even on IBIT is $30. There. So my break even is $30. So what I'm saying is if we continue to see, $30 is my break even. I don't plan on going out super far, Frank, just in case, Bitcoin does get a run. But what I can do is I could probably sell like a 5 or 10 delta call and just lower the cost basis every maybe 20 to 30 days. And so if my break even is 30 and I can grab, let's say 20 cents, well, it lowers my cost basis by 20 cents. And I do it again, same, I'll just kind of monitor price here. But if I can lower my cost basis, let's say 20 to 30 cents every cycle that I do a covered call, I mean, it helps me increase the bottom line. What I'm trying to avoid is if I cover it and then Bitcoin rips, well, then I'm going to be, covering and rolling and trying to get out of the way. I want to roll it out in time, up in price. And there's only so many times you can do that before the broker's like, if it's run too far, then you're going to do it for a debit. And I don't love rolling credit covered calls for debits. I try to, get paid to roll them. So I'm trying not to get super aggressive on covering IBIT, but I still think that's great. I think it's good news for us to be able to trade more than just, buying an ETF. Instead, you can actually trade options around it. So that was news that broke last week. So keep an eye on that.
Well, I still have my long vertical on BITO.
Long vertical on B. Okay,
that's looking
good.
A little better today. I had it at I bought a call at 20, sold a call at 29. So that's a 9-point move. I paid $1.80 for it. So I think the max profit would be $720 by March, if that works out.
Yep.
I did the same thing on Ethereum and somehow got the same debit for it. So I also paid $1.80 on that.
Okay.
Except the numbers for there, it's a $5 and a $15 call on ETHU. Which is
okay. You're trading a double X. That's a 2X leverage ETF. Okay, got it.
So I mean, it's still the same amount of risk.
Sure.
I don't know if I would outright buy this because of double leverage. It's already a leveraged product.
Mm-hmm.
Like it's basically kind of like buying the stock market, but even worse in terms of volatility. So.
Yep.
I mean, I figured having a $1.80 credit to go out several months into next year is probably not a bad call. Yeah, especially with the idea that interest rates were going to be cut, seeing 50 basis points this meeting and then expected to be like, I think they're expecting like 100 at the end of the year. So maybe another 50 by December. So devaluing of the dollar. I like this play because gold is out of reach and crypto is it's been churning lower the past several months. So I'm happy with, my positions on crypto.
Sure.
I'm looking at indices as well. I think I'm just going to try to trade range within, intraday range. So we saw, today hasn't moved too much, so I'm looking at selling selling credit spreads. I'm trying to get 57.40 today, hopefully above $1 credit. So if we keep running higher, I think I'm going to look for credit spread there.
Okay.
But if not, I'm trying not to get impatient and hop in a trade. But
sure.
That's kind of where I'm at now.
No, that makes sense. Yeah, this, I mean, at least today, price is really muted. I am probably going to be taking some, you and I talked about the broken wing butterflies that a lot of times I'm looking at position like, broken wing up here, broken wing down here. I'm just going to start looking at kind of doing more at the money and just see if price wants to drift a little bit higher. Not necessarily for the profit trap, but for the the income, but also the profit trap is kind of the kicker. So if I get, let's say 50 cents and I also can, go like 5X that, if I get a profit trap by the end of the day, I'll probably set these like 0 and 1 days to expiration, like broken wings that I think for right now, I'm going to tilt to the bullish side. I'm just going to tilt to the bullish side simply because as much as I want to see a pullback, I think the market is so high on its own, its own optimism that sentiment is carrying it higher. I know that we might struggle to melt up significantly higher, but I just feel like the disappointment would have to be something like, I don't know. I mean, if somehow Powell completely contradicts himself on Thursday with 10 Fed speakers lined up, maybe that's a reaction. But otherwise, it's going to be news. And we have, earnings season kicking off here. We go through the final week of trading through this week, the 27th. We end the quarter, end the month on Monday, the 30th. And then earnings season is going to kick off with financials. We have non-farm payroll on the 4th. So until, I don't know, I mean, either the market's going to melt up prior to the news and it doesn't really react until news actually tells it to, or we don't have any type of reaction until news actually hits the headlines. And that's a big, I don't know. I mean, we could see the market just keep running and keep melting up higher, or we can see the market's like, okay, we're sitting here at all-time highs, but justify it. This is the market asking for maybe data to continue to come in better and show that employment is looking better. Unemployment rate is steady or even getting lower. I think that would be a big reaction to like a non-farm payroll announcement on the 4th. And then earnings season, if we kick off with financials, which has been the second or third best performing sector of the year, 21.44 in financial sector. That's pretty good overall. Actually, let me see. Did JPM recover from that 7.5% sell-off? Not quite. So JPM putting in some highs. I think Costco has earnings coming up. Maybe Costco has earnings Costco has earnings coming up here this week on the 24th or the 26th. So that is Thursday after market. This is going to be about a $40 move. The only issue with Costco is they're probably $5 wide spreads. So if I go to the 27th, they're $5 wide until you get a little bit further out. I mean, on the call side, you can see they're $5 wide. On the put side, they end up going a 250 wide. But the issue is it's much wider. Implied volatility this week around $35. If I went out a week out to the 4th, I'm just wondering what would it cost me to take a trade here. The expected move. Let's price this one out, Frank. If you're interested, I'm interested, so I want to price it out. If you don't mind looking at it.
For
Costco.
talking about Costco's earnings.
Yeah, Costco. Yep. So Costco earnings this week.
I kind of like the idea of pricing it out and then selling the iron condor.
Pricing it out, selling the iron condor. Okay. All right. Let me get logged in here.
Because I feel like you can collect more premium. I think the payout would be better if you bet on the stock not moving as far as we think. I feel like that tends to happen early on. Maybe the price changes, becomes more expensive.
Yeah. I would rather see, I mean, a really simple one would be just to buy a credit spread and make it dirt cheap. And if it goes up, it's a full credit spread for profit. If it goes down, you take a managed risk. But I mean, is there any reason for Costco right now to be bad? I mean, every time I've ever gone to a Costco, anybody I've ever heard go to a Costco, it's always busy. That's it. I love Kirkland's signature, blah, blah, blah. I love Costco. It's I hate going to the store now because I'd rather just buy stuff online and not impulse buy with crap that I don't need. So anyway, here is where I'm at. We have earnings on Thursday. We have an average move of around 4.5%, which I think is fairly safe. 4.3, 4.1, 4.5, 3, 3, 4, 3.5, 4, and 5. I would even say 4% is probably a bit safer. So the stock's trading at 916. Let's do a 4% move on 916. We're looking at about a $36 move. Tasty's implied volatility has it around a $41 move. I mean, I'd like to sell options if I can, or just keep it really simple and just do a credit spread on it. So either way, how many times do we hit at least 4% post earnings? I'd like to see it over 5, 5 out of the last 10, but let's find out. So how many times will go out 8 days? This one didn't get the job done. This one does. This one does. This one does not. This one does. This one does not. This one does on day 8, which is my least favorite. I'm going to cross that one off. This one does. This one does not. And this one does not. So we're 4 out of 10. So 4 times we hit the expected move of 4%, which to your 4%. Strategy, Frank. Yeah. So the 4% is the expected move. I'm being conservative. but only 4 times out of the last 10 did we actually hit that move or beyond it. So I think for your idea of selling options or selling premium would probably be a good thing. So I wonder on the.
So if you buy a put at 865 and sell a put at 870, so that's your downside legs, and then you buy a call at 950, sell a call at 955. You sell this iron condor. It's trading at $1.67. So the risk would be that minus or 5 minus that amount. So the max loss is 333. So the payout would be greater.
What are your puts again? You're
puts,
buying
you
what
said?
put? Yeah. What puts did you buy? 865 or 860?
Buying 865.
Okay, and then selling 860. 870.
Yeah.
Okay. So you're doing a bull put spread. And then did you say buying the 950 and selling the 955?
Selling the 950, buying the 955.
Yeah. Okay. So that iron condor. So you get $2 credit. From what I'm seeing, $2 credit, risking $3. Probability of profit, that would be about a $40 move there. Actually, less than that. It'd be about a $35 move. We're anticipating a $36 move. What you want to see is basically price stay where it is. So you're given all this space. Let me see my colors here. You're given all this space. If price just stays within this range, you're grabbing profit. So basically, if you get a muted reaction, your $2 credit probably decays quickly down to maybe $1. Take your 50%, take profit, and move on. That's not a bad trade.
I think that. So when is earnings? Is it?
It's Thursday after market. So you can set it up. So if you did it for the let me go out to the 27th here. So you'd have essentially 1 day reaction. If you do what you said there, you sell the let me get rid of this. So you sell the 950, buy the 955.
Do you think premium would uphold up until then? Like, you think it would still trade at $1.80 like it is now?
Well, if it comes out quiet, you're essentially trading a 0 DT environment on Friday. So the decay would be very fast. You can easily grab like 25-50% of that profit probably within the first hour or two of trading on Friday. The issue would be if the trade is neutral going into earnings, and then it actually opens up here and it's like pushing higher, threatening your bear call spread. Then it's going to be like you kind of establish that as the line in the sand. You need price to just stay where it is, and it's going to take all day for that to look better. Or if it fades, it immediately looks better. So best case scenario.
I'll probably wait till Thursday just because price could move all the way up to here or something by then, and then that whole range is kind of messed up. But I would probably need to do it Thursday before the bell, so I could close out Friday morning, because unlike SPX,
right,
they will probably count it as a day trade, because they'll probably close it out for me before the day ends, just to minimize the risk of getting assigned. Okay. So I might do it the night before, but we'll see. I think I like doing being range bound on S&P for now.
Sure.
Selling options has been much better than betting on volatility.
I agree. I'm looking at let me see if I did an equidistant. So if I did a 915, I sell. We're expecting to see. I said a 4% move. So 0.04 times 916. We're looking at about a $36 move. If I sell 40 above, and this would be 875, 40 below there. I mean, I'm not going to take this trade, but for a $27 debit, I'm getting what's expected to be like a $30 to $36 move. That's an expensive way to trade it, but if you've got the capital, you're not risking, you're not really risking $2,700. That's just what it takes to get the trade up front. The only way this trade shows like, oh my gosh, I'm going to lose so much, is if price literally after earnings is nowhere. But if we have a gap higher, gap lower, what you're looking to do is, do we at least get a $27 move on Costco with an implied 36 as the expected move? Now, going out a day is a lot different than going out a week, because as I showed you, you've got like day 1, day 2, day 3, day 4, day 5, day 8, because that's over a weekend. Sometimes it takes the entire time in order to make that 4% move as expected. So anyway, just a couple ways to look at it, but I think selling would be better. And an easy way to trade it too would be like, you know what? I think Costco is going to have solid earnings print. One way you can do it and forget about all the calculations is we're trading at 9.15 right now. I sell the 9.15 and I buy the 9.10 and I get $2.35, and price, all it needs to do by Friday is be above it. If price is above it by Friday, I'll keep that full credit and I'm risking about 1-to-1. And that way price can go, up to infinity, down to infinity. If I lose, I lose 265 per contract. If I win, I win, 235 per contract. So that's not a bad play.
You could also do the what's it called, broken wing butterfly, but you're buying a broken wing butterfly put spread. So like, you're buying puts out of the money or deep in the money.
Yeah, so you do something like this. So go up to the top end of the expected move. So you're getting like a 945, 950, and then do.
Yeah, so I'm at that right now. 945, you buy a put. 955, you sell 2 puts, and then 960, you buy another put. That is right now. It says 502, but I mean, could go down to like 4 or 3, just moving a lot. So if you could get something like that where you're only risking 1 out of the $5 spread, could be a good idea.
Yeah.
And then doing the same thing to the call side.
Yeah, but what's your dead zone? I mean, you're still playing a game where if price doesn't do anything, that broken wing and that broken wing, I don't know if those are going to be as good as, I mean, a really simple trade is if I sell the 9.15 and I buy the 9.10, if price goes up, then I make about $235. That's an easy trade. I mean, I'd like to think that Costco earnings are going to be pretty freaking positive. If they're not, fine, I'll take the risk on the trade. But if they are, I could do that for essentially it's like trading a 0 DTE, because when we have earnings after market Thursday, we only have Friday with price. So unless we see price, number one, if price, drops lower, okay, fine. I mean, here's what I will do. If I take that trade at the money and I get $2.35, okay, and it goes down, then I'm just going to wait for this and I'll just do a 2 contract trade down here and then take it back up. So if I, lose 265, but then down here at the money, I can gain, $5. I wash this trade, I walk away net profitable, and Costco's an easy win. Obviously, if I take the trade now and price goes higher, by Friday, all I need price to do is not, open higher and just dump for the entire day, which I don't know what
news
would be.
You see their earnings forecast? It's incredibly high.
Is it? Let me see.
Yeah, their EPS is $5.08.
508
the last
versus
3 quarters have been in the 3s.
Wow. Yeah. That is pretty up there, isn't it?
Heavy expectations to the upside. It seems like a lot of room.
We had a 486
to be wrong.
Back in this would have been September 2023. They were at 486. Hang on a second. Let me see. Let me look at a little fundamentals. Are we the last guest today? I know we went long today, but are we the last guest?
Yeah, we are.
All right. Earnings growing, expected to grow. Insider selling, probably not helping. Like bigger picture, we're trading at a 51 times price to earnings, 1.6 price to sales. Fair value says 540. This stock is 67% overvalued. Doesn't mean anything, but Costco compared to Walmart, compared to Target, Dollar General, which got beat up like crazy, BJ's Wholesale Club. This is kind of interesting. Right in here. I mean, actually, you know what I'm going to do, man? I'm going to do. I got a trade right here. Here's what I'm going to do on Costco. I'm going to go up to the expected move, put in a bear call spread out to I'm going to sell the 950 by 955. I'm not going to take it for $1. Okay. I'm going to take this out to, let's see. If I sell the 950 by 950, that only gives me 1 day to manage the trade. I need to see price like hit and fade. What I'm going to try to get filled on is, if we had a $40 move, that puts us up around 55. Let's see here. Those deltas, I'm going to put this way up here, dude. So I'm going to try to get like a 16 delta, 965 by 970. We'd have to have a big bullish reaction here. I'm going to try to get filled for 250 on this spread. And I'm looking for price to go way up in price if it does, and I'm looking to fade that back down. So I'm going to take a trade where it's like a 1-to-1. So if I get filled, I'm asking to get filled at 250. I will watch this. If it offers up like $1.50 to $2, post earnings, I might take the trade. But I'm just going to put it in as is, well outside the expected move, well above what I'm calculating for earnings. And most of the time, it looks like earnings just fall within the range. So this trade is unlikely going to get filled. But if it is, I'm pretty confident that I'm putting in a decent level, getting filled at a 1-to-1, and looking at price to see if it will fade a little bit over the coming days. So if I put in this trade, that's a 1 DTE, or a 0 rather, because I take the trade, but I'm not getting filled in this until it actually hits my ask at 250. But anyway, that's what I'm going to do. So 250. So this is a 965 sell call, 970 buy call, creates a $5 wide spread, trying to get filled for 250 credit. And I'll let that one sit and marinate for the week. And then we won't know this until, maybe it gets filled like Thursday, Friday, if there's some type of move, but I doubt it's going to get filled immediately. I'll just wait and see. And from my end, I'm going to monitor and modify the trade to see if I like something better. But looking at the overvalued, fundamentals, I'm not saying that Costco can't go higher, but what we're likely going towards is at some point, this is going to be a split. I wouldn't be surprised if they do a 10-for-1 split, and all of a sudden Costco is trading at $100 instead of $900, or $90 instead of $100. So in fact, that might actually happen, maybe with this earnings report. If it comes in solid, they might actually do a 10-for-1 split. They might do a buyback as well. So anyway, I know that from the Costco member side, I think this is a company that, pretty much wants like full loyalty and patronage, like through and through. And most people are like very loyal to Costco and they freaking love it. So I think if it offered a split, I think there's going to be a lot of order flow that would come back into it. So anyway, I certainly like to own it, at a 10-for-1 split, just offers it up where it's like, yeah, I'll take some exposure. But anyway, all right, I'm going to put that trade in. 9. Where'd that go? There we go. 965 by 970 pending. Make sure that is pending. Yep. So there. All right. So that trade is in. I'm going to throw that in our Discord. So that's going to be under stock options trade. Costco 9/27 expiration. Sell the 965 call.
I really don't see how Costco could miss.
I don't think so. I mean, I don't see it missing either. It's just a matter of if it does beat expectations, it's like, does it push a crazy amount higher? I mean, and if it does it actually like push there and stay there for the day, or is it like, push up and then it gets faded immediately like that day on Friday? So that's kind of what I'm putting in, is I see that they could, hit expectations, make a big $30, $40 move to the upside. But if that gets faded a little bit to fill the gap, that's all I'm really trying to time for Friday. Pending.
Yeah, I mean,
Costco earnings Thursday after market.
I think if they, at least for the rest of this week, the move might not be severe. But if you look at the past, like, earnings reports, they've all just, over the span of a month or two, have just gone up significantly. So I'm even wondering, what if you took like a vertical spread or some way out of the money call for like a longer term expiration?
I'd rather wait for a split.
Just seeing the gradual.
I mean, if you're
You'd
going to
rather
buy
wait
it,
for a split.
yeah, I mean, how far out of the money you want to go on $1,000 stock? I mean, I guess it's not the end of the world, but it's like if I went out and did a leap for $1, I mean, that's fine. But this thing has been on a rip.
$80 move in 1 month or less than one. Well, let me see. This was June.
From that August 5th low, right?
June.
From August 5th low to now,
So
it's gone up it's gone up 17%, $130 in the last month and a half.
So if you go out till November and say you get like $1,000 call, I don't know. I'm trying to see what that would look like.
Well, I can show you the
November
probability
15th,
of that trade is probably low. November 15th.
It's
upside, I see
$9.
Yeah, so I see about a $73 move expected for November 15th. If it goes straight up, we're getting towards 985 to 990. If you bought the $1,000 call, so are you saying buying like $1,000 call for November 15th?
Yeah.
Okay, it's going to cost you $1,000. So it's a $10 debit, which means your break even's over $1,000 at 1010. It's another that's a 20 delta. Like it could be tested for sure, but I think your best trade there would be if you did this trade as an example. If you went out right now and bought the let's say the $1,000 call for the 11/15 expiration. If price shoots up with earnings, that is going to shift this delta to maybe a 30 delta ish. I would just take the profit right away. I wouldn't even try to get this trade to have to go to $1,000 because if it does, especially if it takes longer to do that, you're just going to see that time decay go against you, right? So if we had an immediate bullish reaction, that's not a bad trade.
Look at October 4th then. That would be a $240 call for 1,000 strike price.
Yeah, you're right.
And if
I do the same thing.
If you're talking about that initial reaction,
yep,
you'd be paying far less. And then if the delta does change in your favor, you could maybe be looking at like $5 to $7.
I can roughly calculate it right here. So if we had let's say we hit the top end of the expected move, which is going to be around let's say 950 ish, because about $35 expected, so 950. We go up $35 and we're trading at a 9 delta. So if we go up $35 at a 9 delta, you can add about $3.15 to a 2.44 call. If you get out of that trade for $5 or better, Frank, you're turning that into a pretty nice win. You're getting well over 100% return on capital. That would be if we take that, it's a $244 risk. If price goes down with the earnings report, then you're toast on that trade. But if price goes up, $20, $30, you can turn this 240 debit into probably, I would say $5 or better. And that's not a bad play. So trading earnings out of the money, the delta shifts. I mean, that's about accurate where you could probably see this trading for like a 5 to 550 call. And that would give you a nice little return. Let's say it trades for $5. You're getting 100% return on capital. 550 minus 2.47. You get 122% return on capital. So that's a good play. That's banking on like a decent $30, $35, $40 move to the upside, which expected to give us a $40 move based on earnings this week. And I think going out to the 4th is good. So you have a little time in it. Because immediately, if you did a September 27th, that's a terrible trade. But you'd want to see that immediate reaction, have a little bit of time premium in there, and see those deltas shift in a big way where you can probably grab a nice chunk of profit. So, dude, I think hypothetically, I like that trade. I'm not going to take that one. I'm just going to keep my credit spread because I'm looking to sell it up here. But I like that trade. If we did a 10-4 expiration, we said a $1,000 long call. And that's let's say 245 to 250 debit. So I want to track that one. And then I have my 965 by 970 bear call spread for 250 credit. And that one's pending.
And if you were to take it now and have price continue to, just make these 1% moves higher up until earnings, you probably even just get out before then.
Yeah, if price was gonna,
Not have to
I mean, it
worry
has
about
to
the play.
move. If price doesn't move, then you're gonna see your value go sideways. But if price does like go a little, I mean, today, for example, we're out of the gates here. That's a decent move. I mean, 900 to 916, you get a $15 move. That's not bad, you know? So, I mean, yeah, if we have another like $5 to $10 upside, you could probably see a 25 to 50% take profit before even earnings on Thursday. But if it stalls, then you're looking for essentially earnings to give you the full move for the earnings play. So I like that
Yeah.
one, dude. I'm gonna kind of just track that one for education purposes. But yeah, I think that's a
Yeah, I
good
don't know
play.
if I'll
It's not
take it.
expensive. Yeah, not expensive. But I mean, for a long term play on Costco, I mean, I've owned Costco since, I'm trying to think when I became a member. It would have been back in like maybe 2017. I mean, I've had some exposure in Costco for a while. I started to get way heavier involved in like COVID when I just like bought everything I possibly could. But once we made like a triple bagger run from, dips at 400, we went up to like 750. I didn't quite take the 100% there, but other than that, I've been just trading options on Costco. So it's been a great run. I'd like to see either a 10-for-1 split, which I don't know if that's going to happen, but I wouldn't be surprised if it does. I mean, heck, if Chipotle can split, I think Costco can split. If Apple splits and Amazon splits, I think
Yeah.
Costco can split. So, anywho, yeah,
I
good stuff,
agree.
man. All right, anything
Well,
else? I'm going to get this finished and typed out here. This is a pending out of the money bear call spread. So,
all I can say
one,
is
need price.
waiting on gold. Hopefully,
Okay.
gold will
For
come
pullbacks?
down and let me buy it.
Yeah.
That's what I'm looking for. I kind of regret selling my GDX because although it's not, it's not completely correlated to the gold market, it's the gold miners still did very well. So I missed out on the rest of that gold run.
Okay.
What else? I look at Nvidia a lot and just think of it as like the S&P or the Nasdaq, just because it's when it's muted like this, it's down 0.63%. The S&P is really not doing anything. And you look at the other days when the stock's just running higher, you see Nvidia is up like 2 to 7%. So
Right.
I don't know. That's a good gauge on just trying to figure out whether or not we're going to see moves or if the range is smaller than we think. So that's kind of what I'm using to help gauge selling these credit spreads. I also saw this morning. We have the yield curve even higher today. It's up 28%.
Yep.
We're at 0.18. And we started, let's see, what was last week? Last week was like in the single digits, now in the double digits. So, I mean, it's steepening.
Mm-hmm.
And I know, maybe conventional indicators can be thrown out the window now, but I feel like if this has been the number one indicator of recession, what is it saying to us now? Like, should we be blindly bullish?
I really don't think
if you are, it works out.
I really don't think that anybody knows what the future holds. Because I don't know how many lessons could we look back on and say, well, this has happened. I think this is going to happen. We have 100 different scenarios that could play out right now. The big uh-ohs and the big red flags would be that we had an inverted yield curve for the longest period ever to now a disinverted yield curve that continues to steepen and become more and more disinverted. That's, and again, we're only talking about, okay, back 20 years, back 30 years, where we had these terrible events like 2000 dot-com bubble, great financial crisis, COVID. All those were like, yep, that's what's going to happen. But we also have this like weird transit, we keep calling it like transitory recession, where like things have experienced downturns all at different times. The market breadth has been up. The Fed is cutting. There's literally it's a 50-50 shot, dude. I mean, the cutting by 50 basis points has shown in the past when we cut in 2001 and 2007, that clearly was not enough to, tame the employment situation and everything started to skyrocket and the economy went into the crapper for, a recession. But right now we're sitting at like off of all-time lows. We're not at all-time lows because we've seen the SOM rule trigger for July. But we're sitting near like these historically low unemployment numbers for the last like 40, 50 years. So I'm not saying that it's a good thing to see the trends change and all of a sudden we're having a softer labor market, but it doesn't look the same as what it was during great financial crisis. Also, household wealth, company margins, profits, like it's different. So I don't know. I mean, I wouldn't be surprised if this actually starts to turn south, just to see if employment does get better. I think this actually turns south a little bit more than just like ripping straight up. So, and just because I say that, the correlation has been, this was the tightest labor market we've had in a long time, and now we're starting to see the loosening of that tight labor market. So that's my concern, is the more this goes up, the worse our job numbers are actually getting, the worse our labor market's actually getting, and the reality that at some point will start to weigh on everything. It'll weigh on prices. And at the end of the day, we sit here and we, predict and we forecast. Look, the market is going to tell us when things are bad, and what we have to think about is, if it starts to price out that things are getting worse and things start to go red, all you can do is you wonder, okay, is this a buy the dip, or is this there's no stopping it from the downside and we have a bigger, steeper, nastier correction? Nobody knows. But everyone that's been planning for a bear market for the last 4 years has been getting their butt kicked. And so eventually they might get proven right. But I don't think that's now. The only thing, and again, outlier risk, in my opinion, is something that we're not even talking about yet. And I don't know what that is. Obviously, if I knew what it was, we talk about it. But something we're not even talking about. Maybe it's a war. Maybe it's some crazy amounts of geopolitical tension. Maybe it's the dollar maybe the US has a failed bond auction. We've been freaking offering short-term treasuries like every week, and maybe we have like a failed auction and the market reacts to that because the bond market is supposed to be the smartest market in the world. That's one thing. But until price shows us,
I want to look at.
Yeah. So that there's things like that could happen and quickly turn price. But at the end of the day, it's price that's going to tell us, okay, we need to be a bit more cautious. Right now, price is not suggesting anything outside of like, if you're holding, you're holding. If it melts up higher, everything's great. But if price turns to the downside, I do believe that whatever risk we do have out there, it is going to come violently. So, I mean, this drop in July to August was violent. If it happens again, it's violent. I wouldn't expect it to be like, oh, just a little tiny correction. It's like we're probably going to have like a 1 day 3, 4, 5% sell off, and then everyone's going to panic, and then the market's either going to buy the dip again and we're recovering all over, or it actually gets worse. That's the big outlier that I don't know. And so for that, I'm like cautiously bullish. I'm protecting. I've got some hedges. I'm trying to make my hedges cost effective, where now I'm actually taking like broken wing butterfly hedges where they're credits. And if I get paid, cool, I keep it. If I'm wrong, I lose way less on the risk side than I get on reward. So that's all I'm thinking about right now. But I think whatever.
Well, I have a question.
Yeah, go ahead.
About bonds.
Okay.
So why is TLT dropping as a result of these, rate cuts? Because Treasury bond value has like really declined since the FOMC.
Yeah. Well, the reason they're saying that is because the bond kind of front ran the idea of cutting rates. And so the bonds were ahead of it with the rates dropping, right? So the Fed's going to be cutting rates. The bond market started to price that in. And so now the bond market is being said that like, oh, there's stability here. It's already been priced in. So if yields start to go up, that's why your bond prices would go down. So like I'm long TLT. Actually, that was one thing I want to look at today. TLT is at 98. Son of a gun. I need to check and see where if I might just get out of my TLT position. I'm long out to like 2026, but I don't really want to have the exposure here. Like that's a pretty decent pullback. Let me see where I'm at right now on TLT. I might take profit here, dude. And it sucks because I should have been looking a little bit more aggressively at like $100 or better. But let me go TLT. If I've got some profit on this right now, I might just take it and then I can reassess the whole bond situation. So let's go. So I've got a break even of around 13.26. I should be in pretty good shape here. So let's go. Just going to grab an individual count. These should all have the same type of trades on TLT. So TLT, I've got an 82 by 103. Right now it's trading for 17.66. Now, right now I'm in for 13.26 on the debit side. So 13.26 minus 17.67. I'm up about $441 per contract times 4. I'm up about, 4.41 times 400. I'm up about $1,700 per contract. I think right now, Frank, I'm just going to take profit and move on and not worry about the bond drama, because I wanted to see if price, with yields coming down, I wanted to see if price will rally back up and hit my symmetry target, which is right here around 105. But if we drop lower and all of a sudden I'm waiting for like this trend line to get tested, I'm going to lose value on that diagonal spread. So I'm good just taking the profit now. If I looked, I thought about this a lot over the weekend. If I go to my TLT position as a whole, I'm currently up around $12,000. I'm just going to preserve that, as opposed to if I get it called away. Let's go, let's see, 21 minus 13.26, 774 times 400. So I could get $3,000 per account. So it'd be, my max profit would be around like 25 grand. I'm essentially taking about half of that right now, and that way I don't have to worry about it. So I don't know. I could be making a rash decision, but I'm not really confident that the market itself, and this is what, to your question, the bond market was pricing in way early the rate cutting cycle. And if that's happening, we might actually see the 2-year be firm, and the 10-year, they actually talked about the 10-year increasing. If the 10-year increases on the yield, then the 10-year bond price goes down. And I don't know if the 20-year is going to be as affected by that, but obviously we want to see the 20-year yield going down for my TLT to go up. And so to be safe, I'm just going to take the profit and go ahead and get out of this bond position. So I'm not leaving with nothing. There's still some profit there, which I'm fine with. But if I look to close, we try to get 17.55. It's super liquid, which is nice. I should be able to get 17.55 here, and I'm closing out both positions. So it should be 1, 2, close for 17.55. Hopefully, nope. Hopefully 17.50. Yeah, I'm just taking. So I got filled at 17.52. All right, I'll do the math on the profits here in a moment, but I'm just going to take the profits. So 17.50. Oops, let's go 55. I'll go 17.50. Oh my gosh, come on. 17.50, 49. All right, let me finesse this down by the pennies. Can't fill. That's annoying. 1, 2. All right, got filled at 17.52 there. That was weird. All right, so I'm just gonna knock these out for the accounts that have that exposure. And what else you got, man? I'm gonna just take profit on TLT. I'll do the math here, like I said, in just a second. 17.51.
Why not just buy, like, say, the bond ETF for short-term treasuries? So 1 to 3 years. I'm trying to find a ETF for that, and I see SHI, SHI. So why not just buy the short-term bond ETF when we know that more cuts are coming, and that shorter-term yields are more sensitive to lower interest rates? So it's more likely to see SHI go up over the next several quarters. I don't know. I'm just trying to think about this. So in the long term, I feel like this sort of thing is going to go higher. Also pays a dividend, which is nice.
Yeah.
But you said you were long TLT, right? And then you
Correct.
Or you had somewhat of a long position on it.
Yep. It was a diagonal spread. I had the 82 call 82 call, and I've been selling against it for like the entire year. I bought bonds back in January. And I've been selling calls like every 30 to 60 days and just like reducing the cost. So I want to say I paid close to like $17 or $18 for the debit, and I've got it down to $13. So my net position there is so I just closed out. So 82 plus 17.52 is 99.52. Actually, I just do this. So 17.52 minus 13.26 is 425 at 400 shares. I just made $1,700 per contract. So yeah, I'm up like 13.6 on the trade. My max profit was around 24,000. I know that's leaving a lot on the table, but like I said, my concern was, and I thought about this a lot on Friday when this thing peaked out here. This is the 17th. This is right before the Fed. But the more, deep digging the research that I've looked into, the 2-year is where the Fed is supposed to be taking rates. So the 2-year sitting at 3.6. The discussion is that the 2-year will continue to stay firm and the Fed just comes down to it. So we go from 5.5 and the Fed's looking at a neutral rate around this 3.5 or 3.6, possibly 3.25. The Fed might shoot past this a little bit. But if the 2-year is firm and the 10-year goes up, that gets that disinverted yield curve even further away, right? If the 2-year stays where it is and the 10-year gets steeper and rallies more, 10-year bonds go down, 20-year bonds go down if the yields obviously go up. So I'm trying to play it safe. I'm just trying to take the profit. I kind of want to sit back and see what bonds give us. I don't know. I mean, they're not something I like to trade a lot of. I mean, the 60-40 portfolio that a lot of traders know, like tried and true, has actually performed really well over the last couple of years. It's up like 20-something% over the last couple of years. The issue is if you had the 60-40 portfolio and you replace the 40 in bonds with gold, you have the exact same performance. And I think if you were to say, what would you rather have right now, U.S. bonds or gold? I would rather have gold. So for me to take that profit and run, I can reallocate to gold, to silver, to other assets where I think it's not necessarily about U.S. bond market. And here's why. Do you remember what happened in the UK in 2023? If I go to the UK, is it UK bonds? I can't remember the symbol. Fudge. I'm looking at. There was dang it. It was like the UK 10-year. Was it this guy? Not the UK 100. UK 10-year. I don't know. This might be it. No. That's 2022. The symbol is, this is the 10-year bond, but something like this happened where their 10-year bond yield like broke and the bond market broke, and then it took the Bank of England to step in. So in the back of my mind, I thought, what if that happened in the U.S.? I don't want to be exposed to bonds if something like that were to happen in the U.S. Everyone argues like, oh, it's super liquid, but what if it isn't? I mean, we saw on August 5th what illiquidity looks like. You can take the S&P, the bond market, you can take the most liquid instruments in the world. If it's a FOREX and everyone's running the same door, there's no liquidity. So I don't know. I'm just trying to limit where I've got profit. I'm going to take it. I can allocate that elsewhere. It just opens up more buying power. So I don't know. I think it's partly because I don't know what the bond market's going to do. If we have a positive drift, I'm much more inclined to think that stocks, indexes drift higher. Bond market, I have no idea. It makes sense. It should go higher. Like bonds themselves should go up as yields drop. But what if the yields have dropped so much, Frank, that it's already priced in, right? And then we have, okay, the bond already made that rip to the downside. The yields dropped enough, and then the bonds start to go back up. If yields go up, bond prices go down. That doesn't help my long position on TLT. So that's what I'm doing. That makes sense? Run this out. Like I'd rather trade gold, to be honest. I'd rather wait for a dip on gold than get back into bonds again for right now.
Gold is going to be a tricky one, though, in my opinion.
Yeah, to what degree? Like, do you see gold crashing, or it just runs away from us?
No, I don't. So, like, seeing a 1 to 2% pullback.
Yeah.
3% rather. Seems highly unlikely, but
yeah,
it's kind of what I'm hoping for.
But if you have, I mean, here's one way you can look at it. I mean, if you have zero exposure in gold, if I had like $1,000 to put into gold, I would take 300, 300, 300, or 300, 300, 400. Make my $1,000, and just give me something where it's like I'm not going to put all in one spot, but let's say you take a third, you take a third, you take a third. You dollar cost average. At least you're starting something here, and then you're willing to say, look, I'm not just going to buy the highs. But I get it. Like, it seems like gold feels like it's running away from us, but I'm just not going to take the bait, man. I mean, maybe gold has to go up and get like capitulation type move, and it looks like, oh my God, gold's broken. Well, if we have a pullback, I'll still treat that like we can go back and retest the high. So if nothing happens, I already have exposure on gold, and I have for a while. So this is not a bad thing. I'm just waiting. But I want to add more to it. I'm, a little bit impatient, I suppose, because I'd like to add to it, and I just add at highs. So I'm hoping that we have some type of pullback here, which is why we keep talking about maybe the dollar, jumps for a little bit of a risk off tone or some type of bid on the dollar. But I don't know what's going to cause that. I don't know what the dollar, why does anybody want to own the dollar right now? It's been in a downtrend for 3-4 months. I think the stock market gains to the upside still hinge on a dollar that's got to get weaker. We're in this conversation that seems to get more and more serious every year about people trying to move away from the dollar as world reserve currency. And not that it's going to be dethroned or it's going to take time to do that. But even if it's more commodity-based economy, even if it's more gold as a balance sheet hedge instead of having U.S. debt. But I don't know. So point is, if I knew the bond market more, I would trade it more. But I think my position on TLT was one little position. I just moved the needle about 1% for everybody's account. No big deal. It's not a big deal. But I'd rather take that now thinking that I've got it locked in and there's still time left in my trade. Get it off the table. It's over the 50% take profit. So I'll take it, whatever. And then if I like bonds again, I'll reestablish another position. It's not that hard. But I just think right now, seeing that we've already priced in these aggressive yields and they've dropped so severely, if I don't see yields really budging, that's kind of my concern, is that yields don't want to move because they already did, right? I mean, the 3-month has been going aggressively lower, but all I'm doing in my 3-month is trading something in my Roth IRA that's probably just getting less and less yield every 3 months now, which is annoying. And then the 2-year drops from 5.26 all the way down to 3.6. This is way ahead. I mean, remember, this is where the Fed was, 5.25 to 5.5. So this has dropped. Is this about where it's going to stay? I mean, why would the 2-year go much lower? I don't know. I feel like the bond market already made the move, or at least the yield market already made the move.
Well, if that's the case, then gold might be limited to the upside.
It could be. It could be, but central banks are also buying gold like crazy. Maybe it's not the U.S., but China is. Other central banks are. Gold is getting added in a big way. I would say gold is probably a more attractive hold right now than U.S. debt. So, I mean, like I said, this has been, gold is outperforming the entire index this year. There's clearly demand for it. And I think when it moves and we get these like pretty momentous trends, they tend to stick around for a while. And nobody knows how high gold is going to go. I mean, if things get really nasty, is gold going to rip up to 3,000 plus? Sure, maybe. I would take gold going to 3,000 before I take the TLT going back to like 115 or 120. Thoughts? I mean, if you were to say right now at a clean slate, okay, so we have a turtle, call it gold. We have a turtle, call it bonds. Which one do you think is going to outperform? I would take gold.
I guess gold's just going to move harder regardless. So
yeah, I think so too.
If it does outperform, then it's going to, or if it does go higher and bonds go higher, gold is likely going to outperform. So I choose gold.
Yep, and I'm the same way. I take my chances on gold outperforming for sure.
But I'm just going to be patient on it. And
yep.
I don't know. Is there anything else you wanted to add for today?
I don't think so. I think I'm pretty good. That was good session. I mean, P&L's up for the day. Took some profit this morning on SPX. Looks like the ES trade is going to work out pretty nicely as well. And from there, tomorrow's a new day, and just keep monitoring stuff. Got some vol positions I'll be watching. I might dive a little bit deeper into earnings this week. So if I go to Earnings Whisper, earnings calendar, let me go to the website here. I'm just going to check there. There's one website that I keep looking for. I don't want Monday. I want to see like the whole calendar. Let's go to the month. Man, do you need to buy this crap? All right, let's go to Stock Twits. One more thing. We'll go Stock Twits. And go to earnings this week. So if I go to earnings, so we have 4, 7, 9, 11. We don't have a huge number of earnings, so mostly the notables are going to be here on the screen already. So Micron is Wednesday, and Costco is Wednesday. That's about all I see would be of interest this week. Costco, I put on the trade that 965 by 970. Micron, I don't know, probably the same thing as maybe a one-time credit spread. It's been underperforming compared to other semis. NVIDIA's pretty much the exact same as SOXX and SMH. But if I go to tomorrow, I don't see anything that I really am interested in here. If I go to Wednesday, Micron's actually after bell Wednesday. Let's see here. Nothing really that I like there. BlackBerry, if anybody's interested in trading a 30-year-old phone, just kidding. Costco is after bell Thursday. Accenture, if that's an insurance, then that's another thing I'm annoyed with how bullish Progressive and insurance companies are. Healthcare has been pretty solid. I've got J&J, but that's not an earnings play. I'm just long healthcare. That's about it. Yeah. So it's light on the earnings side. I think I like your approach with kind of daily plays on SPX or NDX. I mean, I might look at something like that as well. Just kind of throwing a few trades out there to grab some income this week, and we'll come back and do it again tomorrow.
Yeah, I'm trying to be patient about it, but by midday, which is pretty close to now, if we're not, breaking this 57.30s on SPX, I'm probably gonna look to sell some credit spreads there.
Okay.
But, yeah.
Cool. Before you go, let me go SPX. Yep, just before you go SPX, I want to make sure I don't have some like crazy gamma level out there you need to pay attention to. I see one up here at 57.50, but again, looking at the high from Thursday last week, it's right here. So yeah, if we just kind of melt up there, I would just look to see does price respond to that high, and if it does, that's a good credit spread for the day. Yeah. Otherwise, it's melt up city. So cool. All right, dude. I'll let you go. Thanks, man. That was fun. Thanks for going long. I know you love it so much.
Yeah.
All right.
Big fan of the long streams.
For sure.
Yeah,
all right, Frank.
We'll pick this up tomorrow.
All right, cool. See you, everybody.
We have a good trading day.
Yep. Have a good rest of the day. See you, man.
Yeah. You too.
Bye.
See ya.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.